great to have your company on this 8th day of January. My name is Jessica Remy, a market strategist here with Moomoo. So the US stock market is having a very strong start to the year. We saw the S&P 500 and the Dow Jones both touch brand new historical record all-time highs overnight. The Nasdaq 100 didn't quite get there. It is just 2% shy of hitting its highest level in history, though, which it last hit in October 2025. But what you need to know is sentiment is overwhelmingly positive, and this seems to be the case. This is why the key indices, excluding the Nasdaq 100, are at record all-time highs. So why is positivity in the air? Well, it's for a couple of key reasons. We're about to get company earnings season underway. Of course, that starts next week with big banks the first to report. But all in all, the expectation is that US companies, they're in really strong shape and they could see another very strong year ahead. So far, we know that earnings are expected to grow 11.3%. Secondly, what you need to consider is the data is now increasingly suggesting the US central bank can cut interest rates. This is perhaps evidenced by last night's US employment rising less than expected. This basically implies US employers, they're not hiring as many workers, maybe, just maybe, because they're using AI to replace them. That's a consideration. But what is also pulling the market higher is what we need to touch on just quickly. I guess you could say it was from four key areas. One of those are US oil refiners. They're rising. US oil producers such as Valero are saying that they're going to keep selling refined oil from Venezuela indefinitely. And that's because the US is expected to ease sanctions there. The three other key areas of stocks charging higher: commodity companies in the metal space, as well as defense and cybersecurity companies as well. Now, let's just bring that front and center into the focus. Why are defense and cybersecurity companies hitting new record highs, and why should this be getting your attention? You might like to save this video for future reference in case you don't look to take a position in defense and cybersecurity companies. So here is what you need to know. In case you've been sleeping under a rock, US President Donald Trump is at it again, stirring up geopolitical tension. What is happening? Glad you asked. I'll answer that if you don't mind. So Trump is intending on now securing Greenland. For those that don't know, Greenland is actually a territory of Denmark. And all this comes after we recently just saw the US take out military operations that, of course, led to the capture and arrest of Venezuela's leader, Nicolas Maduro. What happened overnight is very critical. So the Danish defense minister and deputy prime minister basically came out saying that Denmark will be spending 88 billion Danish kroners. That's about $14 billion US dollars, basically, to rearm Greenland. So the I guess now we've got the US, or pardon me, the Danish defense minister, I don't know how to pronounce his name, Truls Lund Poulsen, something of that ilk. He's basically saying that this is a very serious situation that Denmark is finding themselves in, and they're going to do anything they can to protect the region. So you need to keep your eyes on defense stocks in the euro area because they are pushing up for the fourth consecutive day. This is a very quiet country. Denmark is moving to rearm Greenland should the US strike and threaten the region. Now, to illustrate this point, you need to look at two ETFs. So what will happen is if we do see the situation basically erupt, just look at the US Aerospace Defense ETF ITA. This is continuing to push new record all-time highs. We spoke about this on Monday. ITA is now again at unprecedented record all-time highs. And of course, as this defense ETF suggests by name and by nature, it includes US defense, aerospace, and military companies. So companies in this ETF that you should be thinking about that are also hitting record levels include L3Harris, Northrop Grumman. These companies are missile companies. They make arms and they're supplying to them different regions around the world. So think about that ETF, and then on the other side, think about the European equivalent. You could say one of those is the Stocks European Aerospace and Defence ETF EUAD. So that's taking off. As we said, European companies in the defence space are pushing up to new highs, and this is something that they've done for 4 straight days now. You need to be having a look at this. The fact that these ETFs are telling us the world is actually a little bit worried really tells you that you should be watching these ETFs. Now, the thinking is that obviously NATO has instructed countries, as they have for the last several years, to spend about 2% of national GDP on defence. And so the thinking is that NATO is going to call upon countries to spend even more than 2% of the amount of money that they make on defence to shore up their borders and protect their own countries. And this is, of course, at a time when the EU is already looking to support Ukraine further. With that in mind, let's just think about some other investments to watch now. So I guess you could say one of those is Crowdstrike. Crowdstrike is also a defense company. Sure, yes, it is a cybersecurity company, but it actually garners defense dollars when you are thinking about that push by NATO. But Crowdstrike, for its own reason, is charging. So Crowdstrike's trading volume last night doubled compared to its average trading volume. This basically suggests that people are taking what is happening quite seriously, what's happening in Europe, but also I think about Crowdstrike is the world's most relied upon cybersecurity company. Its shares jumped about 4.5% overnight. And you could say the next biggest cybersecurity company in the US is Palo Alto. That rose by a similar order overnight. So these companies are heavily relied upon with the AI revolution currently underway. And of course, they play a critical role. And this is perhaps why last night we saw a cybersecurity startup accelerator program actually be announced, and Crowdstrike was hailed as a company that is going to be added to that accelerator program, right alongside Amazon's AWS and NVIDIA. That's another reason why their stock is charging. Also consider that recently we've seen this company be tested against significant threats, and it's basically proven that it's garnering more clients' interest, more of clients' interest for those that aren't already using their services. It's not only the clients that are really liking Crowdstrike, but analysts are too. So overnight, Cantor Fitzgerald and RBC reinforced their buy ratings of the company. And in fact, this company has got a strong consensus rating. If you do have a look at the Moomoo platform, there's about 30 analysts or investment banks that are covering the stock. So as for where their shares could sit in about 12 months, well, if you have a look at consensus, our price targets range from about $500 to $700. Last night it did close at about $479. So let's move on to another stock to add to your watch list. It's a stock that I speak about a lot and love it because it's the world's biggest in the lithium space. No surprise, that's Albemarle. Albemarle, their shares jumped 2.2% overnight, piercing to some of the highest levels that we've seen in a very long time, the highest level since 2023. So this is in anticipation of the lithium price continuing to move up. So the lithium price has been surging significantly, continuing to prove that the lithium bottom is well and truly behind us. And yesterday at Moomoo, we covered why lithium demand is expected to continue to outpace supply. And this is why you should be expecting higher lithium prices in 2026. And vis-a-vis, that also means higher lithium stocks. Again, why you should be adding this stock and other lithium companies to your watch list. Albemarle stock is also up almost 80% in the past 3 months, and it's got a buy rating among investment banks and analysts who cover the stock. That's if you have a look at the Moomoo platform. Baird was the latest investment analyst to upgrade the stock overnight. It was given a buy rating. Another investment to add to your watch list is an Aussie one. It's MVR. That's the VanEck Australian Resources ETF, and it's hit a brand new record all-time high. And let's just pause on this for a couple of key reasons. So bear with me here. So the fact that we are seeing this ETF hit unprecedented levels reflects a couple of things. There's really strong momentum in commodity prices. So we're seeing rising demand for critical minerals and metals. And we do know we're also seeing the depreciation, continued fall of the US dollar. And of course, commodities are bought in US dollars. And the lower the US dollar gets, the more appealing these commodities look to the world's biggest consumer of commodities. And who is that? Well, that's, of course, China. China is aiming to become the leader in building out AI. And that's why, of course, they're buying more of our critical minerals and resources. So, of course, China and much of the world need resources to build the chips and the data centers. And this is why demand is at unprecedented levels and is only expected to continue. And again, the favorable position of the US dollar means you could be expecting and should be expecting high commodity prices. So what happened overnight is we saw the price of aluminium move up 1.4%. It's now up 5% this year. Copper rose 2% overnight, taking its year-to-date gain. Wait for it. It's copper. The copper price is up about 7% this year. Gold is holding a position or a rise of about 3%. What we're also seeing the iron ore price continuing to push up to new fresh highs, which is wonderful. Of course, iron ore is the key steel making ingredient, and it's up about 4.4% this year, which is great for Australia because that is our largest resource and the most critical to the Aussie share market. Also, overnight, we saw the nickel price surge about 10%. I'm rounding, being generous, but all in all, it's up about 11.3% this year. And why we are saying to look at MVR, the VanEck Aussie Resources ETF, well, it's pretty significant. It's got about $500 million in assets under management, and it tracks the Australian mining and energy index. So in this ETF, if you think about the biggest companies that make it up, a BHP is the biggest. So it includes, or 8% of the ETF is BHP. The second biggest holding in the ETF, Fortescue Metals, about 7.5%. Rio Tinto is also a pretty big holding in this ETF as well. But there are other big holdings, include Australia's other big resources companies, not just metal and mining companies, but also energy companies as well. Rounding it all out, it also gives you exposure to lithium. We spoke about that today, thinking about Albemarle, but it also gives you exposure to coal, aluminium, and of course, uranium companies as well. This ETF has done pretty well. It's up 40% in value in the past year. And taking a look at the indicator analysis on the Moomoo platform, we can see that it's more profitable than 60% of its peers with an annualized return of 12% over the past 5 years. Plenty to watch and consider. Thanks so much for your company. Stay safe. Happy trading.